Good morning, everyone. My name's Will Scargill. I'm Managing Analyst for Energy at GlobalData. And today I'm going to be taking you through a brief outlook for the energy industry, looking at some of those aspects of future energy and the decarbonisation and the road out to 2030 in particular. So firstly, for those of you who don't know us, GlobalData is a leading provider of data insights and analytics for the world's largest industries, including in the energy industry, oil and gas, power, and mining. So to start with, to go through the outlook for energy, it's important to note the major shock that we've seen from COVID-19 last year and the ongoing shock that we're seeing. So in the energy market, oil was hit the hardest with demand declines of almost 10%, but we've seen similarly the gas and power markets have been hurt. But the key thing to note is that it's not just a short-term shock that the energy market's seen and the global economy has seen overall. If we look on the right-hand side of this slide, you can see the latest global GDP forecast versus the pre-COVID outlook. And what we can see is that because of the significant dip in 2020, and despite the recovery that we're hoping to see with the rollout of vaccines and hopefully getting back a bit closer to normal this year, we still end up by 2024, the global GDP growth between 2019 and 2024 is about almost 30% lower than we were expecting pre-COVID. And so that means a significant drop in the growth in demand for energy that we see. And the impact of COVID-19 has come alongside major disruptions that we were already seeing from the energy transition, whether that be the governments and companies driving down carbon emissions, or the impact of new technologies such as electric vehicles, energy storage, renewable energy, hydrogen, or smart grids, or the proliferation of LNG to provide more gas to areas in the world and use that as a transition fuel. So there's two big disruptions coming into and playing off each other at the moment in the energy sector, which really which have really changed the outlook that we see for the market. The change that COVID-19 has seen in the market is shown by the oil and gas sector's results that we saw this year. So on the left-hand side here, we've got the super majors net income for 2020 just reported in their annual reports. And as we can see, there's multi-billion-dollar losses, which are primarily coming from asset impairments due to the downward revision of price expectations for the energy market. And that reflects a recognition by the oil majors that the market isn't going to go back to normal. We're going to see potentially lower for longer. And although the outlook differs between different companies, it's a common theme that these companies are recognizing that change in the energy market, and that we're not suddenly necessarily going to rebound back to where we were. And that's seen as well, if we look on the right-hand side, what we've been doing since the start of COVID-19, since the onset of COVID-19, has been tracking the significant revisions to CapEx guidance in the oil and gas sector that companies have been putting out. And what we saw last year was many companies significantly revise their CapEx guidance for 2020. You can see NOCs was down by 20%, integrated oil and gas companies' CapEx guidance was down by 30%. but this year, but the guidance we've seen being put out now in recent companies' presentations and results for 2021 doesn't see a rebound in that capital investment. It reflects the recognition of those companies that the market is still depressed. It's going to take time for demand and investment to get back to where it was. And so actually, while major NOCs may have increased their capex guidance from 2020, from the revised 2020 levels, actually integrated oil and gas companies and a number of the petrochemical and downstream companies have again further reduced their 2021 capex guidance compared to where their 2020 revised capex was. So there's less investment going into the sector as a reflection of the tighter financial environment and still depressed outlook for demand and a need for new investment in new projects. We've also got ESG investment, as we said, linked to the change of the energy transition. ESG-led investment trends are having a big impact on energy companies in pushing for net zero emissions goal, looking at where their financing can come from. And we can see that on the left-hand side of the screen here. We've just tracked a couple of sample companies, so BP and ExxonMobil on the integrated oil and gas company side, and Ørsted and NextEra Energy on the renewables side. And we can see the significant divergence in the trends of share prices for those companies as investors become driven significantly more by ESG targets and sustainability measures. We'd expect that trend to continue with the financial and capital markets pushing for sustainability in the global economy and the energy sector. That push for sustainability has led IOCs to put in place significant targets to change their businesses for the energy transition. Now, that's been led so far particularly in terms of transitioning away from fossil fuels into renewables by the European super majors. We've seen big targets for development of renewable capacity by the likes of BP, Total, Eni, Shell, and Repsol. Although what we haven't seen yet is ExxonMobil and Chevron and ConocoPhillips make that same move, but there is increasing pressure from the investment community on US majors and other companies within the industry to drive forward with emissions targets and with adapting their businesses to the energy transition. So where do we see the energy market going out over the next 10 years? This is our base case oil demand from 2019 to change from 2019 to 2030 by sector. And we still see some growth in the transportation sector, although this is at a lower rate than before. And the petrochemical sector is the one where we see the most growth in oil demand out to 2030, while most other sectors are giving a negligible change compared to where we were back in 2019. What we also see, if we look at it on a region basis, is we start to see Europe as kind of the leader in that energy transition decline or start to reduce its demand for oil. Although in all of the other regions, we still see continued rise for oil. Now, while this is our base case out to 2030 based on the current policies and investment plans in the energy sector, That's not to say that with the significant turmoil that we're seeing, that we might see change from that base case. So, for example, transportation is a key driver of that growth in the oil market, and is still the biggest demand sector for oil. But we could see further electrification of the electric vehicle fleet out to 2030 and beyond. We can see on this left-hand slide that the US expectation at the moment, on which our base case was founded, is uptake and penetration of electric vehicles into the passenger car fleet is significantly lower than the likes of China and Europe. But President Biden is putting forward significant policies to incentivize the use of electric vehicles, so we may see that increase. There's also questions over whether transport demand will return to where it used to be in terms of overall use of energy in transport, because people may not go back to offices and commute full time. We did surveys where we saw that the majority of people wanted to either stay, who would worked in offices full time prior to lockdowns, wanted to stay working remotely, or have a mix of, or at least have a mix of remote work and moving to offices. So there may be less demand from commuters, and there may be also less demand for business travel, with companies having seen that they can do their business via Zoom or a lot of business via Zoom and other video conferencing applications, and not necessarily wanting to spend budget on travel as much and for transport as often. So there could be significant behavioral change even after we hopefully move past the lockdown stages of COVID. In power and industry, heat and power and industry switching is driving gas demand, but in Europe we're already again seeing declines in gas demand. But counter to the declines that we see in Europe, Asia is a big driver of gas demand out to 2030, and we see significant growth over the next decade. That's despite the significant renewables growth that we see in the power market, with renewables increasing their share of the power of global power generation to over 20% by 2030, and potentially overtaking gas, hydro, and nuclear as the major contributors to global generation. But there could also be faster switching of fuels in the next decade if renewables can move even faster in some economies. As you can see on the right-hand side of this slide, there's a lot of differentiation in the speed of adoption of renewable penetration within the power market. So Western Europe will be around 50% renewable penetration by 2030, according to our forecasts, but that's a lot less as we move into the US, China, India, and the Middle East, where there's still a lot of use of coal, gas, and oil that could be switched to renewables. So there's a lot of potential for renewables to take further share compared to that base case forecast as governments and companies drive for decarbonisation. The other aspect that we'll see is a lot of change in new energy forms. So what we've seen this year and the past couple of years is a really big uptick in interest in hydrogen as the energy carrier of the future. There's been a lot of, the chart on the top here shows the partnership deals with companies in the energy sector related to hydrogen, and a lot of these are related to use of hydrogen in refineries and production of green hydrogen, partnering between oil and gas companies and power and utilities companies. But there's also a lot of partnerships between energy companies and vehicle manufacturers, say, to try and create the hydrogen economy of the future. And there's also a lot of investment going on in research and development. So from our patents database, we looked at a sample of hydrogen-related patent filings over the past 5 years. And actually, Saudi Aramco has a major lead in the amount of patent filings that they were looking at, that they had filed in the past 5 years compared to other industries. So you can, compared to other companies, so you can see a big push in investment in hydrogen, and we expect that to continue. So 2021 is going to be really telling for the future of energy. How's COVID-19 changed behavior in transport demand will hopefully get further through vaccinations and move beyond lockdowns this year. We'll see what energy policies President Biden may implement, but also what additional targets governments may agree for climate change at COP26. And then we also have the question of China's implementation of its policy targeting carbon neutrality. How will they look to target that through their next 5-year plan? And then further, what will we see from oil and gas companies in their shift of strategy from renewables? And how fast can those have we seen a little bit of a bubble, or will we still see new investment continue apace in new energy sectors such as hydrogen vehicles and electric vehicles? So we're going to be tracking all of those new areas of energy over the next year and looking at what answers 2021 brings for the future of energy. So thank you all for listening today. For any other questions, please email us at the address on screen. And just thank you to my colleagues at MEED for inviting me to speak today. And I hope everyone stays safe.